Assalamualaikum warahmatullahi wabarakatuh. Hello guys,
My name is Yesita Ine Prastiwi. My number is 2022-0430-152.
and I Nia Dwi Srihayani. My number 2022-0430-177.
Asian stock markets were begun on Wednesday as surprises in oil and Chinese factory press add to worries that a hot U.S. inflation reading could relieve pressure on bullish markets to live interest rates. U.S. crude futures rose 1% to a two-week high of 18.5 US dollar a barrel in early trade, and Brent futures made a one-week top of 18.5 dollar. Factory gate price in chains have soared 13% year-on-year to October. That showed beating forecasts and warning of pressure heading down supply chains to global customers. MICI Broad Index of Asia Pacific shares outside Japan and Japan's Nikkei H dropped percent in an overnight on Wall Street, a long rally pursued, with the Nasdaq logging its first fall in a dozen sessions. S&P futures fell percent in morning trades. U.S. debt to add is expected to show customer prices galloping higher at 5% year-on-year, and even though Federal Reserve officials Neil Kashkari and Mary Daly have considered it is running hotter for longer than the expected. Coming from them, I would imagine that now 3 is officially literally the belief within the Fed that risks around inflation are much more elevated than previously estimated. NatWest markets track the strategy side in a note. Longer debt bond had rallied on Tuesday, flattening the Treasury yield curve as investors seem to be wagering on hikes in the next year or so, squashing growth and inflation in the years beyond. A firm CPI read can add a bit more fuel to the flattening, the NatWest analyst said. But I would argue that at this stage, a weak CPI number wouldn't be enough to ease markets into thinking the Fed will hold back. T-shirts differed a bit in Asia, horse lifting the head. Benchmark 10 years yield about 2 basis points to percent after it had touched a 6 weeks low of percent overnight. Currency markets have been fairly quiet, but trades favored safe havens on Tuesday and lifted the yen to a 1-month hike. The Japanese currency held there on Wednesday at per dollars, and other sensitive currencies such as the Australian dollar were under pressure, with the Aussie testing support at its 15-day moving average of.
The dollar will be sensitive to movement in the 2 or 5 year part of the U.S. Treasury curve, said Kristen Weston, head of research at broker Preston in Melbourne. I think we will need to see a monthly US CPI print of 1% to see the dollar index break out of the top of the rank of 18 for his side. The index was last at 18.3. Chinese economic slowdown is also nagging on investor minds, especially as a credit crunch seems to be quickly spreading throughout the current property industry. Brown in the sector had surveyed a fast pounding on Tuesday, with the sell-off dragging in even investment-grade debt. The market is now driven more by fear rather than rationale, said analysts at JP Morgan. Valuation have factored in the worst-case scenario. Other clouds are also brewing, with a survey in Japan showing manufacturing business confidence has fallen a 7-month low, and Tesla stock a bit of a cue of retail investor sentiment tonight would be. The car maker, which has been the poster stock of quickest thumping rally from pandemic lows, surveyed its sharp price fall in 14 months on Tuesday, as traders bragged of a possible sale from company chief Elon Musk.
Thank you for watching. Wassalamualaikum warahmatullahi wabarakatuh.